Well, thank you, Jeanette. Good morning, everybody. Always a pleasure to be with you here on these Trade Thirsty events. We're going to talk about something today that's frankly just working like a charm. As our last speaker, Wally mentioned, that it's like everybody's so worried about what about tariffs, what about tweets, what about the next thing that's going to happen in the Middle East or wherever. And why I love the strategy I'm sharing with you on Fang Options Trader today is because it's just so simple. It's so basic that you can follow it easily, and we make it easy for you with real-time email alerts and text alerts to your smartphone and telling you what to do next and in real time. And so we're going to walk you through that and also educate you. The big part of this whole Trade Thirsty mission, I know, which I share a big trend since launching the company back in 1999 myself, basically is education has to come first. So you're in the right place today with a lot of great speakers, and we want to give you some meaningful things to walk away with so you can start to put these right away into your trading. Just a reminder that everything I'm sharing with you is for your information and education only. Nothing here should be considered a specific recommendation or buy or sell any particular investment. The big thing is we want to empower you because you know that you are solely responsible for your investment decisions. Big Trends and the staff are not responsible for any trades you choose to make. And not all Big Trends products and services are appropriate for all traders and investors. Every trading strategy involves risk. We're going to walk you through how to manage that risk in the Fang Options Trader program here today. We don't provide personalized financial tax or legal advice. Like I mentioned, we do real-time email and text alerts. Make sure you factor in how trading affects your tax situation as well. You probably know what Fang stocks are, but in case you've not been paying attention for a while, we're going to walk you through what the Fang names are and how you can leverage those with weekly options. I really do love weeklies on these higher volatility names, and it's very managed volatility because I've got an indicator that I want to have you see with a lot of case studies of exactly how you can find the best trends in a given week of trading, or less, so we're going to walk you through that. I do have my lead consultant, Chris Aaron, with me as well, so he'll be helping answer questions through the chat. So thanks, Chris, for taking your time here today, this morning as well. So what are the Fang stocks? The big four Fang names originally are Facebook, Amazon, Netflix, and Google, which makes up that Fang acronym. But we've always said Apple should be a part of that as well. So you're starting to see actually the Fang with two A's being talked about in more recent times. We've been doing this now for multiple years with a lot of success. Why? Because they're such big names. And frankly, a lot of people have been shy about trading a lot of these names because they're Amazon and Google, as you probably know, are over $1,000 a share. So you go, I can't really buy the stock, but you can buy the options from the neighborhood of 1,000 to no more than $1,500 to get to control 100 shares. So, or sometimes even more than that. So the beauty of this is that, you can get great leverage with these names. They're leaders of the NASDAQ on the way up and on the way down. Of course, lately it's been predominantly on the way up, but here's one on the way down. This is Amazon puts back at the start of this month. We actually got a bear signal. We're going to walk you through this one indicator I want you to walk away with today is one that you should have on most all platforms. It's the ADX, the green line here, the average directional movement. And ADX is not developed by us, it's developed by Wallace Water, and we'll get into that. But essentially what ADX shows you is when it starts going up, especially off of a relatively low level, then you can get some really nice start of the trend moves. And this is, by the way, on a 30-minute chart, which means that when we're looking at a 30-minute signal, we're usually expecting that we'll be in that trade maybe 2 to 3 days on average, sometimes in and out the same day. We're not trying to day trade here, but sometimes if we need to control our risk, hop back out, we'll do so. We don't do a lot of day trades because we don't want to generate that for even small accounts, any kind of worry about day trader status or whatever. We keep it really simple and say, okay, hey, if we were in a position, we might get into a second position. We're not going to load the boat on all five at once. We want to manage that risk because we get our leverage with the options. This is the case with Amazon, where Amazon's trading in the neighborhood of about 1780 when we get this signal, ADX starting to head up here. And I'm going to walk you through these rules here on this. And we paid on average from our auto trading brokers who help get our Fang options traders in and out automatically. So you don't have to watch this all day. You can set it up to just automatically execute, and more on that in a little bit too. We paid $1,417 on average to control 100 shares of Amazon. On the downside, this is a put option we bought and recommended buying to say, okay, we're buying the 1745 put. Now, the stock's 1780, so that's slightly out of the money. You have to do that with Amazon because it's so high dollar. But you can see this first day that we're in the trade, it's basically kind of chopping around. It's not really going up or down that much. At the end of the day, it starts to dip a little bit. We're not making a lot of money on that trade in the first day. And this happens sometimes in trading. Let's face it, not all trades are a straight up vertical move in your favor. A lot of them involve a waiting game. And the question is, how long do you have to wait? So we're waiting this first trading day. That was Friday, May the 31st. And we're saying, look, okay, would we get out of this trade or will we hold on to it? A lot of people lose patience. What ADX will do is you'll say, okay, is this thing still trending in this case on the downside? And yes, the green line there is still going up. That means that this is still in a downtrend. The two other lines there, the negative directional movement is in red. That's a negative leading above the positive directional movement in blue, which tells us that it's a bearish trend. We're getting more new lows than we are new highs in the most recent look back, and we'll talk about that more too. But the next morning, it turns out the next trading morning is Monday morning. That was June 3rd, and we're saying, okay, now all of a sudden the stock's just shooting to the downside. We're getting an alert out, in that first half hour, getting exited there around this, it turns out about 1710. So you think the stock's gone down from 1780, 1710, it's down about 70 points. That sounds like a lot, but in percentage terms, you can see that essentially that's less than 5%. It's actually closer to 4% move in our favor. And we made how much? 243% on the options. Now, usually when we're getting a double, we're just taking it and running. By the time we got our fill report back, the stock had plunged even more, and we ended up making 243%. Usually I'll take 100% every time and book it and run. Okay, but the next trading day, that Monday morning, we're out. Now you can see ADX in this example doesn't turn around and start going the other direction until the next morning. But we definitely take a bird in the hand approach with this. And because of gains like Amazon, you can see it's really dramatically accelerated our total profit that we've made in the systems back to when we started doing the Fang options trader service August 1st of 2016. So we're coming up on a 3-year anniversary here. It's just another month or so away, and saying, okay, over these roughly 3 years, we've made $13,730 in gross profits. When you add up all the gains and losses before factoring your commission, because everybody's commissions are different. But the thing that we would say is, you shouldn't be paying a lot for commissions. If you're doing a one contract trade, if you're paying more than $10 for that, you're paying way too much. A lot of brokers will help you get in for even a lot cheaper than that, just on a per contract basis. And then of course we have the exit as well. So you've got an entry and an exit, factor that accordingly, and you still have lots left over. You can see it's not a straight line up every month, but it's been pretty vertical. In particular, since the start of 2018, you can see that we've made most of our profits just in the last year and a half. Comparatively, 10,900 gain in the last year and a half, and of course very vertical the last few months. And you can see as a result, we've made more in 2019 than we made in all of 2018, and that was a great year. The S&P was down 4.5% in 2018, and we made on a model $10,000 portfolio, we're up about 53%. So $5,300 and change. Now we're up $5,500 with another half year to go. So we're pretty excited to share this with you, and I'm really about giving you meaningful specifics here. So we're going to show you some case studies, walk you through more of the concept of this ADX and why you should be implementing it in your trading. You can see here's a case on the upside back here in April where we were getting a signal on Google. And you can see it doesn't always have to have a price breakout. This one was getting a price breakout through that recent bit of resistance. You can also see that there's a moving average filter, and we're above that black line moving average filter. So that means we can only take bullish trades. The positive direction movement of blue is telling us we're making more new highs, and we're getting that start of the trend phase. See, that's really all I care about is when is the wind at our back as a trader, and when are you spitting into the wind, which is a mistake, obviously, and you don't want to trade. I only want to trade when ADX is really trending up from this low level. So this is a very specific pattern. What it tells me is that this is what I call the sweet spot, where you can really leverage this intelligently with options and get that 50 to 1, 71, sometimes 100 to 1 kind of leverage. So this is a case with Google, we're getting a signal on Google, and you can see where the stock's trading at the end of that bar, just about 1250, and we're buying the 1245 calls, which are about 5 points in the money. We have to pay $1,421. Controls 100 shares of Google, which of course would cost you 125 grand, right? You can see where you can get 90 to 1 leverage or more with that kind of a ratio. And you can see also that as it starts to move that afternoon, that signal's coming in about 2 o'clock on April 22nd, and it starts to move that afternoon, and we say, well, do you hold it overnight? Absolutely, if we still have a signal that says we should be in the trade. The next morning, it's shooting up even more, and then intraday, we get to our 100% profit target, and we take it, 100% plus a little bit more. And you can see here that in this case, it just kind of stalls out. You know, in the old days, I would just say wait for ADX to turn back down, but now we've learned that, you know, okay, if you get a double or more on a gap, like Amazon was, then you take it and you run and you say, thank you very much, Mr. Market. I will take that and put it in my pocket, the subscribers' pockets, and say, okay, we'll move on to the next trade. It's all about risk management in the trading games, I'm sure you've learned. Now, I'm kind of curious what kind of crowd we have with us this morning. And I want you to type in one of these numbers, 1 through 5. 1 if you're just a day trader, 1 maybe 2 days, but mostly the 1 in a day in and out. 2 if you're a swing trader, 3 to 5 days. 3 if you're a position trader, 1 to 4 weeks, or longer term active investor, 4 or 5. You know, so and we do tend to get a lot of swing traders who are coming in with about expecting to hold about a week. And we say, okay, be prepared that it might be just a little bit faster than a week. It might be 2 days, maybe it could be 3 days. So we're in the kind of fast swing trade side of this, but we don't really want to day trade, like I said, per se. We're just trying to, if we got a double in a day, sure, I'll say thank you very much, we'll take it. But bottom line is that we want to focus on where we're getting that kind of consistency here. Here's a case with 3 different bearish examples on Netflix, because you can see it was below our broader moving average. So this kind of keeps us on the right side of the broader trends. It's only a negative setups. And you can see that when the negative directional movement in red is above the positive directional movement in blue, that can only be set up for a downside trade when that ADX comes crossing up from a low level. You can see that first one's there good for almost 47%. Next one's good here for almost 50%, 49.95. And then we get a situation where our third signal here is actually only good for a small loss. You know, so we're starting off kind of slow, then it's starting to move in our favor. Then it flips on us that next morning. We're getting out for a 3% give back. So the point of this is that it doesn't work every time, but when it works, and it tends to have a much bigger average profit and a much smaller average loss. And that's the secret to trend trading. You don't have to have a monster win percentage if you are making 2 or 3 times as much as you're actually losing. You know, so if I can make 50 and lose even, 25, 2 to 1, that's fine. You can have a 50-50 win rate. Like you say, that's like a coin flip. I don't want to do that. You say, well, if you were flipping a coin and every time you won, you made twice as much as you lost, you should be playing that game every coin flip you can. So the point of this is that, yes, there's a lot of opportunities here. Here's another example with Netflix on the downside, where you see sometimes these first days, we're getting the signal after a kind of a sharp move. So we're never going to be catching the exact top or the exact bottom per se. That's not our goal. Our goal is to say, let's catch the sweet spot in the middle of the move is the more predictable and typically easier one to stay with. And you can see this first day we're in the trade, it's slowly working in our favor, but if it was that slow the whole time, probably not going to make much money on that trade, because we're buying an out of the money put on Netflix. We're buying a 267.5 put. It's a right to sell Netflix shares at 267.50. Stock's already up here at 275. So it's got to drop 7.5 points just to get to the strike price. That's not necessarily a bad thing, because if it gets quickly to the strike price, makes that quick 7.5 point move in our favor, we should be in a profit position because we haven't lost that much time. Which brings up, how much time do you buy on these? We tend to go out to the following Friday's expiration. So every Friday is a weekly options expiration for these active names. They have them out typically anywhere from 6 to 8 weeks going out, a lot of different choices. But if we are sitting here getting a trade middle of this week, we want to go out to the next Friday, knowing we're probably going to be in the trade 2 or 3 days. Next morning, second day in the trade, the stock gaps down from we were at 275, now we're at 255. that quick 20-point move in our favor is good for that double, slightly more than a double, 109 2/3%. So we say thank you very much. Now notice if we had waited in this case for ADX to roll down here, it's right back to where we got in. If you wait for it to come all the way back to where you got in, you're not only giving back profits, you're probably losing money at that point because you've lost some time in the trade as well. So, time really is money, and you need to make sure you're kind of quickly turning this stuff over when you get the chance to book those kind of quick doubles. Now, we use a lot of platforms, TradeStation, Thinkorswim, Metastock. We like all of them. You can find these indicators on pretty much any platform of the major platforms out there. The DMI lines are the directional movement lines I was mentioning. That shows you net new highs and lows. ADX shows you when you're starting to get really clarity about the directional trend if you're getting into an uptrend or a downtrend. ATR is average true range. That just means how volatile that stock typically is. And every stock's got its own unique personality. Some are more volatile, others are not. But this trade funnel allows us to really narrow down our focus to the best of the best trades. Here's one that didn't turn out to be the biggest gainer, only a 44.75% gain, but you can see the pattern is the same, where it's just starting to get in that trending mode and just starting to break out to the upside. It looked to us that this thing had a lot more potential. Now, a lot of times people say, hold on, why would you buy something where you've got this old high here? Why don't you wait until we eclipse that old high? So instead of buying at 1057, they're buying it 10 points higher, 1067. Our exit's another 10 points higher, not even quite that, 1074. And so you're giving up half of your profit potential if you wait for a quote unquote price breakout. We are looking at market structure. We want to trade only when the structure is in our favor and says we're in a trending mode. So here's a case where we're buying about 10 points out of the money on Google. We're paying almost $1,500, $1,475. All these examples are before commission, but again, you shouldn't be paying much for commissions. If you are, give us a call at 800 Big Trends. We'll get you with brokers who can get you in and out very favorably on commissions and on speed of getting in and out. But you can see in this case, the same day, we actually hit what we call our trailing stop, which means that once we get to a certain gain threshold, we start raising our stop to say, let's not give back too much of that profit. Let's not let a winner turn into a loser. Let's really protect it. And so that's where we're hopping out there. And you can see it's before the next day where ADX rolled down the next morning. And that saved us from, a little more of a give back, and we're happy to book that 44.75%. Now, DMI, directional movement, developed by Wells Wilder, a true trading innovator decades ago in this indicator. He also invented the RSI indicator. He was saying that, the big thing that people are missing when they look at the day's range of high to low is he said it's not really the true range. The true range is when you also factor in how much that stock might have gapped that morning on a daily chart and say, you know what? The gap has to be incorporated into that day's true range. If it didn't gap, then the true range is the same as the high-low range. But if it did gap, you add that to the total range calculation. You get a lot more total movement or true range that you then average out looking back over the last 20 days or however many days you want to look at. So the DMIs are showing you, are we making higher highs on the case of a positive uptrend, higher highs, higher lows, where DMI minus is going down, DMI plus is going up for higher highs. That is going to show us when we get into that kind of a mode, that channel is what we're looking for, that kind of a trend phase. That's where ADX will typically start rising, when you're getting higher highs and higher lows in an uptrend phase. Same thing on a downtrend, you're making new lows and you're not making any new highs. That's going to be more of a downtrending ADX upturn. We don't want to trade ranges. A lot of people I know get seduced into thinking, well, I see that stock's trading between, 100 and 110. Well, that can change. If you've been stuck in a range and then it starts to go into a trend phase and you're fading the top of the range and it's breaking out to the upside, especially in those last couple of weeks, you probably would have seen that. You're going to have big problems. So you need to make sure you're aligned with what the structure is, and that's what ADX does for us and our big trends Fang options traders. So ADX basically shows you, like, if DMI plus is going up, new highs are happening. DMI minus is going down. You're getting the gap between those DMI lines starting to widen out. That's where ADX is going to start going up, when that DMI gap is widening. So that shows you a trend phase. And then Wilder put it as a percentile to show you, okay, how much price movement you're getting versus the price of the stock gives you more of a percentage calculation. This is an interesting one because Amazon was actually down and then had this huge rocket up the day after the midterm elections last November. elections happened November 6th that evening, and then the market's going crazy the upside the next morning, and Amazon just barely closes above, but all it has to do is get 1 penny above at the close of that 30-minute bar, the start of the day, November 7th. So at 10 a.m. Wall Street time, we're getting a new bull signal that says, hey, this thing's ready to start trending to the upside. This is one of those cases where, as we put our trailing stop in, we're up a quick 70% plus in this first hour and a half. And then it starts to roll over on this red candle here, 3 bars into the trade, 90 minutes into the trade, we're getting stopped out at a 43.4% gain. You can see it went on to a bigger gain and probably would have been a double before the end of the day. So sometimes trailing stops can actually cost you a little bit, but I'd rather take the 43% bird in hand than worry about if this thing's going to reverse back down and give back all of our profit. And so we're very sensitive to making sure that subscribers get a consistent experience with really well-managed trades, controlling your risk. We send out real-time emails and text alerts saying, hey, we're raising the stop to this, we're raising the stop to that. So you know exactly where it stands. The auto brokers know where it stands for people who are having those trades auto-executed. And so that way you get that very clean experience of how to manage the trade. You're never left hanging. That's always been one of my mottos since I launched Big Trends in 1999, 20 years ago. It's been a great 20 years. Looking forward to many more. But bottom line is, it's all about never leave subscribers hanging. Always let them know where a trade stands, good, bad, or ugly. So we're big on that kind of communication regularly throughout the trading day. You know, so you can see in this case it rolled over the next morning. And then, of course, it reversed. Just because ADX rolls over doesn't mean the stock's going to reverse. Some of these charts look that way, but sometimes it just pauses before it then runs some more to the upside. And you can see, would we get into a downside trade here where ADX is starting to turn up near the right side of that chart? The red negative directional movement is above the blue positive directional movement. You think, okay, this looks like a downtrend, right? Well, ADX is not coming from a low enough level. It needs to be below both of those directional movement lines and then starting to head up here. So on a dotted line, it would look more like that, that little upturn from a very low level. What that means is that usually people have lost interest, and then you can get a lot of renewed interest back in. If it's coming from too high of a level, you don't want to mess with it. Here's another case with another Google example where now with the black background, we can see getting the breakout here, and you say, hold on, hasn't broken through that price action high there. If we wait for that, again, you give back half of your profit if you wait for a true price action breakout. So people that tell me, oh, I don't trade indicators, they've got too much lag, I just trade price action. I always tell them, well, here's your neck brace. You're going to need it for all the whiplash that you get, or in this case, the missed opportunity of getting in when the trend structure was already up, not 5 bars or 4 bars later. So, you know, from this perspective, you can see that ADX is headed up. Our price action rollover here, we ended up taking out a little more than a double. Nowadays, we just would take it out at plus 100, or if it gaps more than that. So here's a case in the afternoon where we get a trade. You can see now ADX is turning up. We've got the negative directional movement above the positive. So this is obviously a downtrend trade, right? So it's a put purchase. Stock's trading about, call it 1030. We're buying a 992.5 put. Say, how can you buy something 30 or 40 points out of the money? Because we know we're not going to be in it that long. We've got options out to the following Friday. And so the time erosion is not a big factor for us. We watch it, but basically you can see we want to just make sure we don't pay more than $1,500 to control 100 shares of Google that would cost you more than 100 grand. So you're getting tremendous leverage here. And then in this case, we didn't quite get the next morning. It gapped down, started to come down intraday that first 30 minutes, and then it started to flip back up. So that's where we get our trailing stop hit. We take 60% and profit and move on. You can see again, if you waited for the ADX to turn, it'd be at a worse level. So, you know, that proactivity is really important for us. Obviously, this analogy of, you know, I would never buy a Fang stock when I could buy options on it instead, because, you know, why would I want to tie up all that capital in a stock when it's a lot cheaper to rent or lease that stock with an option? And it's the same principle with, like, you know, I'm in Kentucky, you know, we get winter weather here, we get snow, we say, okay, I want to go to Florida in February. It's a pretty good rule of thumb that February is going to be a lot better weather in Florida. And a lot of people want to do that. So you're going to pay a premium if you rent that house for a month in the prime season, but you don't have to carry it the other 11 out of the 12 months, right? You pay the premium, you pay a little extra for when you want that exposure, that sunshine, and then you say, okay, now I'm going to get on back wherever you want to go next. So the thought is, that I would never want to tie up my money with all the, of course, in the house, with all the taxes, with all the transaction costs, with the potential illiquidity of how long it takes to sell it. With the options market, I can be in and out at the same moment. Obviously, with stocks, you can too. But in this principle is saying I don't have to tie up $100,000+. I only have to tie up no more than $1,500 to control $100,000 plus worth of stocks. That's where your leverage potential, 50, 70, sometimes even, like I said, closer to 90 or 100 times can kick in for these very brief windows when you're getting a nice quick move in your favor. Now, another thing that's kind of been even a change in my thinking from when I launched Big Trends, I used to preach, hey, you want to get lower volatility stocks, you want to buy them in the money, create more stock substitutes. Like Humana in this example on the right is an example of that, where the stock's $300. If you bought a 292.5 call, that's 7.5 points in the money. You're only paying $940 with 750 of it being intrinsic value. It's got a higher delta because of that, about an 80% delta, which means how much the option will move for a 1 point move in the stock. And yet the average true range is about half of what the Netflix example is 2.25% on Humana. Look at Netflix over here on the left. So, okay, now it's similarly priced, 332.5 on the stock. We buy a 327.5, 5 point in the money call. It's only about 50% intrinsic value. We pay 9.5 for it, $950, same kind of price as Humana. Thus, the delta is a little bit lower. And normally I think, well, that would be bad, normally when I first looked at this. But the big game changer was when we started saying, you know what, you have to factor that against how much the stock's ATR, average true range, is as a percentage. So as a percentage, Netflix is almost double Humana. It's 4.25% rather than 2.25%. And we calculate what then the points that it would move on a daily basis on average. Doesn't guarantee it's going to move that much. It's just an average calculation. It says if you get a 1 ATR move for Netflix 4.25% in your favor, you should make 89 2/3% gain on that option. If you get the same ATR move of 2.25% for 2.27 to be exact for Humana, then a 1 ATR move gets you a 57.8% profit. So you can see it's more than 1.5 to 1. It's 55% more profit on a 1 ATR move on Netflix than it is on Humana. So now it's, say, okay, now factor your average true range calculation in accordingly. And that's why the Fang stocks are so good for trading options, especially for short windows. I would never buy and hold a Fang option because, over time, these windows will close and then you get into chop city. If you get into something where you're holding it and the stock is flat through this phase, that's why so many people give up on a name like this, where they're like, Netflix had been good, and all of a sudden it's been dead for a few days. The ADX is coming down, and people are like, okay, it's not moving anymore, I'm out. And then, of course, what happens? You get out, then you look back a few days later, you go, holy cow, I missed this great move. So now we're getting this price breakout and this ADX breakout. We're buying the slightly in the money 307.5 call, and we're paying $7 for it. And you can see when it gaps up in our favor, the next day, we're getting more than a double, 118%. So, the beauty of this is that, okay, sure, sometimes gaps will not be in our favor. If that happens, if we get a gap against us for some reason that next morning at 10, certainly if our trailing stop hasn't been reached, then we would be out by that ADX turned down if we were still in the trade. So when ADX rolls over, that would be the last point that you should be in this trade if for some reason you didn't get your targets or you didn't get your stop. So ADX rolling down is our final exit, and that'll happen soon enough. You can see that weekly options are a beautiful thing because every Friday is now an expiration Friday. That means that we can really get great leverage with these names, and we don't have to worry so much about the time frame as long as you buy enough time. I don't want to buy an option that has 2 days to go till expiration. So that's why we would typically say, we would go out to the following week's, following Friday's expiration. So you could have as much as 10 trading days left if we got a signal on Monday morning to the next Friday. We won't need that much time, but it gives you that cushion to not have to worry so much about the theta or time decay. So you can see we could take advantage of events, but we do not do the strategy right in front of earnings because I'm not in it for the wild and woolly gap that could be big in your favor or big against you, or could do nothing and collapse that option premium because of the volatility changing. We would rather trade the trend phase. It's more predictable, well in front of the earnings or after the earnings. You do this on a lot of indexes and ETFs too, but we really like it the best on the Fang names. This is a cool example because Facebook, with Facebook and Apple, we can go more in the money, which is my original preference. It's just that some of these names have gone up so much that we have to kind of adapt to not have to pay too much for the options. Here's a case March 4th where Facebook's just starting to go here, just got the big surge above that moving average filter in black. So that's now a positive setup. And then at the end of that bar, stock's trading, in the neighborhood of, call it 165.5, about 8 points in the money. We're paying about $9, $897 to control 100 shares of Facebook. You see the leverage is not quite as high in that example. We're paying $900 for something that the stock would cost us like $16,500. But you can see that, at first we're wrong. And you say, well, why would you not get out of this thing when this thing's shooting back down against you for a couple of half-hour bars? So over an hour, stocks dropped from 166 down to intraday, almost 164. It's down a couple of points. Why are you still in the trade? Because ADX is still stable and rising. So if ADX rolled down, we would get out of that trade. If ADX stays with it, we stay with the trade as long as it doesn't hit our trailing stop rules. So essentially, and a question about what the settings are when you become a paid subscriber, which I'm going to give you a great way to get started at a very low risk entry point, just a little bit, that you get all the settings for that you can set it up on your computer, your trading system, your platform, and be able to follow along on your end as well. And then, so when we get these signals, we're going to send out, hey, we want to buy this Facebook call and we want to pay no more than $9 or whatever our number is. And basically then we're going to get clarity from our auto trading brokers who say our average entry price is this, our average exit price is that. That's what we use for our tracking, the numbers I showed you earlier. So we know this is real world documented stuff here. We never see an individual's account, we just get an average price in and out from the auto brokers. So you can see now it's starting to roll over here. The ADX, you can see, is just slightly bending down here in this area, and we're taking about a 62% gain on Facebook 2 days later, and on the 4th, out on the 6th. So, again, and how much did the stock go? It went from 165.5 up to about 171.5. So you're up about 6 points, about 4%. On the stock, and you're getting 62%. So more than 10 to 1 leverage in that kind of a circumstance, almost 15 to 1 actually. So you say, okay, so now it's just about risk management. One of the things that I have to, probably the biggest challenge I have now with how well the program's been working is making sure people don't get greedy, making sure that people don't make the classic capital allocation mistake of saying, boy, this is really going well. Then and saying, okay, let's not get into that. Let's not get into that kind of greed factor here. I've been speaking of nice comments. We just got a nice comment in just the other day from one of our subscribers, Sanjay, who said, "You guys are doing awesome. Sincere thank you. Many wonderful trades. He knows it's difficult to make money from trading. He said, you guys are the masters." And so he's looking at other programs he wants to add into his mix. So I love getting those comments and I'm just like, okay, stay calm. Don't get too excited. Don't put too much capital into any one trade, no matter how well it's going. Because you want to be proactive and you want to be consistent in your execution strategy here. So what we do is we call out these real-time trades. When we get a signal to buy or sell on one of these Fang stocks, we convert it into an options trade. We say, okay, buy to open. This is an older example. I don't want to confuse anybody with something we just did that might still not have it hit its expiration. So this was Amazon was just crossing $1,000. We were buying 1,005 calls in a June week 2 expiration, paying no more than $900, and it's quoted as 9.00 because, of course, one contract controls 100 shares. You multiply times 100, but and so we get into that and we take advantage of that. Here's another example with Facebook where what I love about these examples where you see that the structure on ADX is saying we're starting to go into a trend phase. You go up and look at this and say, what trend phase? This thing's been in a choppy trading range. If people are waiting for that price breakout, again, they're going to get in too late. And you can see it was almost turning. It kind of flattened out on the ADX a couple hours into the trade, but it did not roll over. It was close. Is this, again, this little bit of a slight move against you initially? And that's what flushes a lot of people out who say, okay, well, I'm not going to hang around. I'm going to blow it out. This thing's not moving quick enough. and then they miss the big run the next day. And then, of course, when ADX rolls over, we're out almost 90%, 89.75% gain on that example. So, our belief is, and like I said, don't go bearish when ADX rolls the other way. I don't think it's got to reverse. You see in this case, it just kind of gradually ground a little higher before it kind of catches its breath. ADX is coming down. We would say it's certainly not a phase on the right that we would want to trade because it's just too choppy and flat. And ADX is going down, you're done with the trade. You're not messing around. It's tempting to want to find some other way to trade these, but really what we're into is just the sweet spot. You can see from the one circle to the other, you can just see in that one period, that's where the directional trend is about as steady and as powerful as it can get. And so that's what's going to allow you a lot more confidence in your trading, because it's easy when you are in the good trades, right? It's hard when you're in trades that aren't working. And when it's not working, we'll get out quickly. We'll even sometimes same day say, okay, it's not working. Go ahead and blow this out. Here's your exit price. Moving on. So a big part of this is knowing that, okay, you've got that kind of clarity. We're never going to leave you hanging. And we're going to always, walk you through, how you can really take advantage of this stuff. So the catalyst for us, there's always got to be a catalyst in any trade that you make. If you don't know what your catalyst is when you're trading, you probably shouldn't be trading. Whether you're doing it off of an event, whether you're doing it off of volatility, whether you're doing it off of what we're doing, momentum-based breakouts and breakdowns, that's got to be in play and active, and saying, okay, now you've got an edge. Now you should be taking advantage of it. If I don't have an edge, I don't want to trade. So sometimes the hardest part of trading is knowing when to trade, when not to trade. It's really easy with Fang Options Trader because we just got this one simple pattern with ADX, and we just wait and wait and wait, and then boom, we hit it. We get a signal, we're in, and we're firing away a real-time email and a real-time text alert to all of our paid subscribers, saying, okay, here's how you take advantage of this. Where you can, I'd like you to buy in the money. So like a Facebook and an Apple, yeah, we're going to go well in the money, give you a high delta that's going to trade much more like the stock. We call that a stock substitute. However, as we said, with Amazon, with Google, even now with Netflix, a lot of times we're a lot closer to the money, or even with Amazon and Google out of the money, and saying, you know what, that's okay as long as we're only in while we have the edge. When the edge is gone, we're out. Like I said, the first thing that we would say is if ADX rolls over, you got to get out of the trade no matter what. So ADX has to be going up. We don't look for any bend, any excuse to stay with the trade if ADX starts to come back down. That would be a final all clear exit no matter what. But then also once we're making money, this profit protection kicks in once we've got a gain of at least 30%. So we found that if you have a small gain like 10 or 20%, you start to try to trail your stops to positive, you're basically going to increase your whipsaws. You're going to get faked out of some trades that we don't want to get faked out on. So we found once we get up to at least 30%, we can start raising our profit protection stop up into the positive numbers. So then we just keep on raising it as the thing goes in our favor. We just keep raising that trailing profit protection until we either get a double or until that stop gets tagged. So that'll typically get tagged before ADX will roll over. It can be kind of simultaneous too. But if ADX rolls over, the trend is no longer your friend, you're done. But while the trend is your friend, we want to ride. We want to take advantage of that. This is about cultivating the patience to give it a chance to work. I know a lot of people, like when we're targeting a double, and then I'll have subscribers come back and say, oh, I wasn't around for a double. I got out when I made 30%. I was happy with 30%. In our view, it's important when you're doing a trend trading strategy to really get your maximum out of your best trades and not say, okay, I was happy with 30%, because essentially if you made 30 and the rest of our subscribers made 100, it's not just the 70 percentage points you leave on the table, it's what it does to your typical average winning calculation. It's lowering the size of your average winner. Your size of your average loser has not come down, and then you're not getting enough out of that trade. So for me, it's not just about protecting from losses and big, we're going to have losses. Protecting from big losses is what we do well, but it's also about getting the most out of your good trades. That's just as important in a trend trading strategy. So keep that in mind. Like I said, when we get the double now, or if it gaps past that, we say, thank you very much. We're not going to find excuses to hold. We're going to say that's good enough to book that and move on. And one of the great things that I do each week for our Fang Options traders is I give a weekly video. This is not a black box system. when you become a subscriber, even with the awesome month-to-month special I'm going to give you, most of our subscribers lock in a year plus, and are happy to pay up for it because of the gains we've been able to generate. But but bottom line, even when you become a month-to-month subscriber today, and try it out for the next 30 days, which I'll get into in a few minutes, so basically, you're going to get the training to go with it. So I'm giving you a weekly video that walks through all the Fang names, walks through the ADX in the system, and how each of these Fang names are set up to either give us a trade soon or not give us a trade soon, why, what you should be looking for, recapping trades that we just made in the last week, whether they worked or whether they didn't. We always recap everything. So you're never left hanging. You know exactly how to learn from what's working and learn from what's not. I call it your success profile. You should be really clear what your success profile is, and with this system, you don't have a lot that you have to learn. You just have to understand about ADX and the right time to be buying options when ADX is telling you that the trend is your friend, the wind's at your back, and you can make some money here. And if it doesn't work, we tell you quickly how to get out too. So here's a Google example. We're buying about an at-the-money option here. Google just starting to perk up. A lot of these trades you may notice, this was the start of March, are happening in the first half hour after the open because the gap, like we talked about with Wilder's calculation of the true range, it's really starting to pick up that, okay, this thing's really making a significant move, not just because of that first green candle, high to low, but because of the gap as well. So from where we closed the prior day to where we now made that next high up here near 1140, that's made a nice quick 12 point about percent gap to the upside here. And true range is dramatic. If you can make 1% every 30 minutes, obviously that would be substantial. By the time you got to the end of a trading day, there's 13 half-hour bars. That'd be up like 13% a day. Obviously, that's fairly rare for a Fang name to make that kind of a move. But the point is that it's the consistency that we're after. Again, when you get into the trade and then you go, oh, look at this, they get me in the trade right near the peak, and then the next 2 hours you're sitting here going, is this thing just going to bleed out here to the downside? You're really kind of starting to wonder if you just look at price action. What's the ADX still trending up? Hang in there. We're not at our price stop yet, our first stop. We give you that first stop, and it's got some room on that first stop so that basically you just don't get noised out while you're waiting for either ADX to roll back down and get us out, or this thing to go ahead and start humming in our favor. You see, after that brief little sideways consolidation for a couple hours, it starts to take off. And this is another case near the end of the day. You see it starts selling off into the close that first day we're in the trade. How many times do you see that and say, uh-oh, the momentum's turning, I better get out by the end of the day. I don't want to be stuck the next morning holding onto something, and then you see what happens. It stabilizes that last half hour, and then it gaps up the next morning. So ADX is going up the whole time. People will ask me, what about the DMI lines relative to ADX? Like DMI is outside of the ADX there and the positive DMI in blue, and should you get out when DMI comes back inside the ADX? And in this case, it's kind of coincident with pulling the ADX down soon behind that. But see, if you wait for ADX to drop here, you leave a lot of profit on the table. We're booking that double in that first half hour when we get it on March 4th, and then we would have given back more than half of our profit if we waited for ADX to roll over. So this trailing rules and the profit target have both really dramatically improved performance. And like I said, by implementing that, we're getting to our goals faster, and subscribers are sending us ravingly positive emails like Sanjay did that I showed you, because we've made what we've made in all of 2018 in half the time in the first half of 2019. So from this perspective, our view is, okay, now just because you're doing that doesn't mean that you should go and take out another mortgage on your house and go load the boat on this. You want to only trade with risk capital. You want to trade sensibly. These numbers are not compounded. We're just assuming you would put in 1,000 no more than $1,500 into any one trade, and we just keep assuming that despite the growth of the portfolio. We're not saying you should now put in, if we've doubled the portfolio, we don't say you should put in double the money now. We say, look, just take a nice, slow, steady approach to winning the race, and it's like the rabbit and the tortoise. The tortoise is going to get you there, but obviously these trades move like rabbits, right? But it's that tortoise mentality of saying we're not going to get too greedy, we're not going to get lazy, we're not going to sit and nap under a tree. we're going to basically always be vigilant about protecting our capital and protecting our risk and managing our risk so that we can protect the portfolio. So here's a case before the last Amazon winner of our prior biggest winning trade was also in Amazon on the call side. And this came in about 2 hours into a trading day, which is a little bit unusual. And you say, well, gee, this thing gapped up. Now it's up even more. Why are you telling me to buy now? You should have told me to buy yesterday. Well, yesterday the structure was not looking that good, right? It's all about structure. When the structure is in your favor, then you should be trading. If it's not in your favor, you should not be trading. So you can see this is another case where you get off to a good start, and then near the end of that first day, a lot of people would get panicked seeing those 3 candles, red, 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 right into the close. We didn't panic because you see it slowed down ADX, but it did not roll it over. And so then you're with the trade. It shoots up the next day, and you're tempted to go ahead and book it. Of course, now if it gets a double, we'll take it. But in this case, we're out that rollover of ADX. This is early on in our ADX Fang options trading, 168.8%. Now our new best winning trade is the one that just happened here at the start of June, where, as we said at the beginning, now you see how this works, right? You see that everybody lost interest because Amazon just flattened out right before we get the signal, right? So if you've been trading Amazon the few days before that, you're going, okay, Amazon's going nowhere. I'm not interested. It's going to just eat me up with time premium loss if it's just sideways like that. So it gaps down, and immediately we get our bear signal. DMI negative is in red, surging up. We're making more new lows. And then you're in, and you say, uh-oh, now it's flattening again. Are we back into that pattern from before? And again, ADX going up, and the green line there says stay with the trade, be patient. It's not going in your favor yet, but it's not going against you yet either. It's just kind of slowly working down, and then the big shot down that next Monday morning. That's where the big home run was, 243% gain. So the principles here are simple. And when you take advantage of the special that I'm going to give you here as my thank you to the TradeThirsty folks, Jeanette, and all the good team at TradeThirsty, is to say, you know what, this is something that you really can learn exactly how you need to set up your charts, exactly what ADX length you should be using, DMI length you should be using, and how to structure that. Now, if you came in late, didn't see this at the beginning, I was mentioning before commissions, when you add up all the winners and losers from the start of 2018 to middle of June, we're up $10,900. So you're going, okay, that's pretty good for a model portfolio where we're not putting in more than $1,500 into any one trade. Over the last year and a half, just kind of steadily cranking along. Sure, there were months where we were kind of just chopping sideways or even a little bit lower. And I always tell people, if you have a couple of months where you have a little give back, you shouldn't panic, because that's what most traders do. They panic after a system's not working for a little bit, and then they miss the greatest run-ups. So a lot of people get out near the lows, they get in near the highs. You shouldn't be worried about if you're getting in near a high after this run-up, because we know even if we have a little give back, as long as you're sensible and don't overcommit your capital in any one trade, you can stay with us over time. So we recommend usually 5 to no more than 10% of the capital you allocate go to any one trade. If you look at this portfolio since inception, August 1st of 16, up $13,730 in gross dollar profits, adding up all the gains and losses before commissions. Past performance is not a guarantee of future results. You can just see though why I'm so confident that we can zigzag our way to success. So you would start small and then you would build. And the beauty of what I'm going to share with you is that usually a lot of my subscribers have paid thousands. Usually 12 months is $2,000. 3 months is usually like a couple $100 a month. Call it it's about $600 over 3 months. But because, like I said, TradeThirsty has been so good to me, when you go to that link at bigtrends.com/Fang Options Trader, you will see that we've set up something really great for you here. Check this out. So instead of having to buy a longer term subscription, what I've done is I said, you know what, try it for the next 30 days for just $99. I'm not going to do a free trial, because basically what I've learned is that if people that do free trials are not committed. So for just $99, that's a very small level of commitment I'm asking for you for the potential to make many thousands. And saying, okay, look, if you like it, we've set it up where it'll auto renew after 30 days. After the first month, within 30 days. If you don't like it, you can let us know in the first 30 days. It's not for me. I don't want to have it auto renew, and we'll take you off of that. But it's just for everybody's ease of not re-inputting information. We use one shopping cart, and we've used them since inception. They do a fantastic job security-wise, to just let that auto renew every 30 days. If you like what you see, which I'm very confident with, we keep doing what we're doing, I'm very confident you're going to love it, not just like it, and say you got the steal of a lifetime getting this for just 99 bucks a month. Because think about it, even if you're paying over the course of a year 1,200 bucks, which we do have some longer term subscriptions you can lock in once you see what you and are loving it, you can call Chris Air, my lead consultant at the 800 Big Trends line. He can get you into a longer subscription after you first love what you see in the next 30 days. But that's the point here, is just to get started and to start taking advantage of these signals. We're going to average about 8 trades a month. So you can see, okay, you pay 99 bucks if you get eight trades in the next 30 days. Okay, so you're in for what? 12 or 13 bucks a trade, and 12.5 bucks a trade. You're saying, look, okay, that's still a pittance versus the potential that a given trade, like you get in on an Amazon trade, where you have the potential to make, in that case, $1,000 plus. So the beauty of this is we stick to our knitting. We're only doing the 5 Fang stocks. You don't have to worry about anything else. These are some of the most liquid, active stock options out there. Behind the S&P, probably Apple is right there, followed by, of course, now all these others that have become so popular. And as we said, Amazon's been very good to us. So even with Amazon's higher dollar price per share, that shouldn't worry you. In fact, it should read opportunity to you. It kind of reminds me of the old joke about the 2 shoe salesmen who go to Aboriginal lands in Australia in the middle of nowhere, and they find a tribe of folks, and they none of them have shoes, of course, and they call back to their boss across the pond, and one of them that's really negative says, "Oh, it's terrible over here, boss. Nobody's got shoes." And the optimist calls the boss and says, "It's fantastic. Everybody could be sold. Nobody's got shoes. I've got a lot of shoes to sell." So a lot of it goes back to how you frame your opportunity. Once you see, you should be optimistic about your trading opportunity if you've got the right system. If you don't have the right system, you're probably rightly pessimistic. So to me, it's about, if you have that right system, combined with then the confidence that you'll build over time, seeing these things work really nicely, and also seeing how they do a nice job of getting you out relatively quickly. And you'll have times where it's just like, okay, quick small loss, quick small loss, quick small loss, and then boom, nice big gainer, medium-sized gainer, gainer that's bigger than the losses. That kind of profile is what you should expect. One other thing we've done here, by the way, you see on this page at bigtrends.com/Fang Options Trader, I appreciate Chris posting there, is that you see we've got this tab here that says Weekly Options Bootcamp. I know I've jammed through this hour here because I'm packing years of knowledge into an hour, and I know it's sometimes it's like drinking through a fire hose with some of the stuff. But I said, look, let's just focus on the ADX indicator. But we have a Weekly Options Bootcamp that you can actually add on here when you sign up today for just an extra $100 one-time investment. You get lifetime access to the educational boot camp. It's 3 sessions, more than 3 hours, teaching about ADX, teaching how we use it on the Fang stocks, and then we do give you some other names, another 6 names in different sectors, including things like cannabis, our favorite cannabis stock, that you can trade as well. So there's even more within the boot camp of names that you could use outside of just the 5 Fang names. But it's all about where you want to start. But if you want the ongoing education, you can just click on that extra tab below the Add to Cart button and get that. I've just got a few more minutes here, but I want to just say quickly that okay, if you look at how you get started, you hit the Add to Cart button. It's probably the simplest way. If you just want to get the trades month to month for 99 bucks every 30 days, you want to add the boot camp, just so I can explain this. You'd be billed 99 bucks every 30 days, or until you tell us not to do that anymore. I think you're going to want that to keep coming when you see the power of these trades. But if you want to add the boot camp, what would happen is today you would pay $199, but then in 30 days you would then pay $99 per month after this first one-time addition to get the lifetime access to the weekly options boot camp of multiple hours worth of ADX and Fang and other training on how to take advantage of these nice quick swing trades. So when you go to that page at bigtrends.com/Fang options trader, you'll see also that if you're having any problems filling out your information, you can always call us toll free at our 800 Big Trends line. That's 800-244-8736. You can email us anytime too through client care at bigtrends.com. And quickly, I want to show you one other thing. When you add this to your cart, I've done it twice now, so let me close one of those out. You add this to your cart, say you just want the trades, you hit the green checkout button, and down, once you get all your information in bold, we need your email in there twice so we can confirm your email. But if you want to get text alerts to your smartphone after you get your credit card info in, again, if Chris has been in with us, if he's helped you, give him credit for helping you. But in this note right under that Chris helped you, you can put in here that text me the alerts. So text the alerts, and whatever your text alerts are, you can see I just typed in a random number here, and then I've typed in whether it's Sprint, whether it's AT&T, whether it's Verizon, whatever your service you're using, type that in as well. Because what we do is we put all the text subscribers on separate batch lists per each cell phone company, and that way, if there's a hang up for any reason, then it doesn't hang everybody else up. So basically, you can get that texted. All that I would ask is that you're going to get plenty of text alerts from us, and with follow-ups on stops, targets, etc. So make sure you have unlimited texting capability on your smartphone plan. Once you've done all this, got that information in there, all you got to do is review the terms and conditions, which are spelled out in this link right here, in the first link in green. And so you can go look at the full terms and conditions. One thing that I would point out, we've highlighted it here, is that it is an automated renewal program, which means that we give you all the instructions anytime you would need to cancel it. If it's not for you, no problem. We give you like 3 different ways you could cancel it. But if you like it, it's just going to renew each 30 days, $99 going forward after this first 30 days is up. So try it for these first 30 days for the $99, or lock in that boot camp special, which is usually like a $300 extra cost, but we're just giving it to you for another $100 with all the other boot camp training on the Fang stocks, the ADX and more. Great buy there too, a one-time investment, just an extra $100 on that boot camp, $199 today, and then $99 in 30 days if you like the trades that you see in the next month. So let me see if we've gotten any other questions, and I'll go ahead and hand it back over to Jeanette. I think I should do that just to go ahead and stay on track. But if you have questions too, remember you can email us, clientcare@bigtrends.com, call us toll free, 800 Big Trends, and make sure you go to that link here, bigtrends.com/Fang options trader, because that special will not last long. So thank you, Jeanette, for having me. It's always a pleasure, and look forward to hearing from even more great traders throughout today's special event.